Hey traders, what's going on? Jamie Saettele here. It is 10/18, October 18th, 2017, SB Trade Desk Midweek Strategy webinar. And before we get rolling, you just give me the indication that you can hear me and that you can see the chart on the screen here. Yay or nay? Let me know. Perfect, says Chris. All right, super. Okay, so lots of 618 stuff going on here today. DXY. And remember, I just would like to remind everybody that we went through last week's webinar, right? And it's important to remember these things. The working assumption or working scenario right now, dollar-wise, right, is that strength from 9.8, and maybe even from over here on 8.2 is actually a fourth wave, right? We talked about all the RSI stuff. We talked about, the daily RSI, right? To 60 on the dollar, to 40 on euro. So I'm not going to go through all of that stuff again, but we're going to work off of that, right? So it's, I've heard obviously a lot of folks talking about on Twitter, the prospects, if you will, of a head and shoulders, a head and shoulders bottom here in the dollar. And yeah, that's possible, folks. But again, a pattern is not a pattern. A head and shoulders is not a head and shoulders until it's completed. Okay. And at this point, we don't have that. There are some, it's something to consider, okay, because we are into the bullish period, or a bullish period, I should say, for the US dollar, right? Seasonality is not everything, it's one thing. And, if we go to dollar index, okay, here you see it, right? This is actually from here until November 13th is actually a very bullish period for the dollar, okay? And then you have a seasonal bearish tendency towards the last 6 months or 6 weeks or so of the year. However, again, it's not everything. We had a bullish period, right? Starting back here in August, and we really didn't, it continued in a bearish period until now, and we really didn't get that. We turned up earlier. Okay, so again, that's just one piece of the puzzle. So to DXY, this is the 4-hour chart, DXY, and the last 2 days, it's been flirting with the 618, okay, of the prior drop. So I am looking at this as a, dollar selling opportunity. It's why we have, these shorts in the dollar right now, right? Euro long, pound long, dollar CAD short, etc. Right? The one thing that is kind of not really making a whole lot of sense to me at the moment, I guess, is dollar yen, but it's been doing its own thing for a while now. We'll get to that. But, you've got a 5 down, looks like A, B, C, right? A, 3 down, B, 1, 2, 3, 4, 5, C. So, I'm looking lower and from here, excuse me, in the dollar and specifically towards this trend line, but if the assumption or what have you that we actually do have this fourth wave going on, then we should probably draw prices back lower, right? Go into a broader range. Okay, so that is DXY. If we go to US dollar, the FXCM index, we're looking at, this is log scale right here, 240-minute chart, right? The index is going to be more or less, pretty similar. And you do have within, this is a Schiff fork, okay, and we're trading on the median line. If we make it linear, in other words, we go back a good deal, the channel that we have from 2011, price has been trading between these two parallels since August, okay? So, resistance, support, resistance on an FP, okay? And then a drop and a pop. So yeah, same thing here, looking lower in this index. If you do get a bit more of a push, I would say that 12,010 basically should be a level that probably hopefully does something for resistance. But other than that, I'm same idea here. Okay, looking for a turn to the downside. Okay, hold on 1 second here. Hold on. Sorry about that. Okay. All right, so there's the dollar stuff. Main thing to know, again, we are thinking that we have some downside in store right here. If we get some weakness, obviously we'll see what it looks like. Let's go right to, before I go into other FX stuff, let's go right to some metals. So we're going to look at gold and silver. Here's gold, and we have hit the 618 of this, right? So 618 in the dollar from the NFP low, 618 in gold from the NFP low, right? This high was just on Friday, so it's been a pretty sharp drop. Amir, I don't know if you can hear me or not, because you're asking, is anyone having a problem with audio? Again, real quick, just one more check. We are not having any audio problems here, are we? Okay, you say now it's fine. Okay, all right. Well, I'll keep going. Okay, so we have this drop in gold again. The level here is good. You have the monthly opening price. Getting a little stretched for my taste on the the 4-hour momentum, right? Again, if we have a low here, or better said, if we've entered a more bullish period for gold, and this goes for any market, of course, but you really don't want to see an oversold reading, right? The 4-hour chart, you want to see RSI bottom before 30, and preferably really, around 40. So, don't know if we are, if we're not in a bull market and, in gold, we could be sideways. So if you start to register oversold and overbought levels back to back, it starts to get a little, it's just kind of a range market. That would be the momentum profile for a volatile range, but a range nonetheless. So, you can see pretty clearly, right, when you get decent runs higher, right, you don't really want to see the market go oversold, right? That's more of it's a guideline. It's not a rule. It's not hard and set, in stone by any means. Nothing really is in trading except for stops. So yeah, good spot for a bounce, a reaction. We have gotten a reaction. We traded 1277 this morning, traded up, $6, 1283 plus, and I am looking for a bit more of a bounce here. So yeah, want to see this hold, of course, near term, especially with the NFP low that we had, a week ago, not quite a week ago. Going to silver. The pattern in silver, again, has been cleaner for some time now. We haven't gotten down to, this is the daily reversal support, 1679 for silver. This is the CFD, right? XAG USD. But if I go to a 60-minute chart, you can see this drop. This looks like a 5-wave affair to me. 1, 2, 3, 4, 5. Okay, so if we do get a more something of a bounce here, I would be I'd be careful on. I wouldn't really want to chase it, put it that way, because the risk you run is that you get, say this is like your A wave. Okay, let's say you do get a rally. If it's a 3-wave rally, right? That could be a B. Then you go down in C. Okay, and then you can turn higher. So again, silver's not yet at its 618. Silver's not yet at the level that I'd really be a buyer. I'd be a buyer probably against 1675, 1679. These areas down here, we have retraced 50%, but this is where I'd be more of a buyer, thinking of being a buyer down here. High volume levels also 1665. So there are a lot of levels. They don't all cluster together, which is, not the best thing in the world. You like to see all those things cluster. But that's what's going on here with silver. So 5 down, which warns me if we do get a bigger bounce that I'd be on the lookout for corrective price action on the upside rather than say just a full-on continuation of strength. Okay, and with the metals and the dollar, it might be, if we're right about the 4th wave thing in the dollar, it might just be sideways, until mid-November. Range trade till mid-November. So very general in that, thinking, right? It doesn't go across the board. There's some currency pairs that are trading, with a different bias, of course, but that's the thought process, at least for me. If we go to the futures on this, love this chart. This is the silver futures chart, and it's been very clean. For the most part, you've spent all of this year, 2017, you spent all of this year trading between this parallel, okay, support, 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 did break it, did trade below it for a period back in July, okay, but for the most part, we have traded between this parallel and even this parallel here, with a couple touches on the median line, of course, in February and April. So, looking for support again down here on the CFD, which is probably going to be a lot what a lot of you guys are trading. I'm not sure, but I'd be looking at support down near 1679, and then the daily close. Okay, it's going to be 1685. That's the NFP close. That was a high volume day in silver. That's important. Okay. Do not really want to see the market close below that close, the 10-6 close. You don't want to see the market close beneath there. Okay. All right. So, the assumption here, again, with the 4th wave action in the dollar, is that we should be looking for lows in the metals, at least near-term lows, right? Lows that last for at least, a couple of days, a week, what have you. So nice run higher, sharp drop again, and looking for support right down here. Okay, let's move on to the currencies. Getting decent action in, euro continues to hold. We had the entry here on, I guess you could have gotten a little bit better on the entry, but the blue parallel, right, continues to do pretty good work. So, you have, this is a nice 4-hour reversal bar, and levels that you're going to pay attention to moving forward. Look, you've got 1790 month open, so that's very, very close to where we are right now. But I'm looking higher. Okay, I'm looking for, I'd like to see a gap fill up at 1946. Again, this is all working within the confines of what I think is a range or a fourth wave pattern in dollar generally. So do like the fact that we've held this this median line, and yeah, that's about it. The NFP level for euro, by the way, is 1856. But how clean is this guy? So yeah, we go back to the low from, I'll clean this thing up here. Hold on for a second. Yeah, I mean, you can really just kind of trade these things all day, right? Trade these bounces off of this. So yeah, very good action on the median line here. All right. So far we're, I guess, lucky enough to survive the stop by about 4 pips. And not a whole lot to add there, folks. I'm just kind of looking for a bounce, nothing crazy at this point. Could again go fill the gap up to 1746. But you know, depending on how things are starting to unfold, what the sentiment looks like, you know, we might be putting in an order to get out at 1855 or something. That's again the NFP level, but just be aware. You know, basically 3 levels to know, I think. 1790, 1856, and 1947. Okay. So just all about the short-term levels at this point in euro. Cable, kind of still dancing around the parallel that we've got here. You know, I guess it's a sign that, or a decent sign that we haven't cracked yet. You know, if it was going to crack, you would have think it would have tried to crack on that run this morning, down to 31.39. We're back just above where we got in at 31.70. The NFP level that you're going to pay attention to here, in other words, the high volume level, is 32.46. Okay. We start to get up there, you know, probably going to want to go to break even on that. Okay, even 32.20, because that's been some resistance here going back really all month, right? It was actually, sorry, support early in the month, then resistance, and then a very minor support. I do like cable higher generally on this, and here's why. So this is the long-term chart, okay? Go to a weekly chart on this. This is the trend line. This is log scale, but this is the trend line from 2007 and 2014, okay? You make yourself a channel. What happened here is the low that we had, the crash low 1 month or 1 year ago in October of 2016, that found support on the 75 line of this channel, okay? Remember, what we're looking for in slope analysis is symmetry. So we're looking for a move to the 25 line, which would be all the way up near 140. It's a big move, okay? Again, I don't think that's probably going to happen until later this year, if not this late this year, like December, you know, because again, that's when kind of all the stars align as far as the seasonals are concerned. And we still have something that we need to, that kind of scares me a little bit about being, you know, buying this or selling the rally in the dollar here, is the COT stuff, right? We still have very crowded speculative long positions in Australian dollars, Canadian dollars, euros, pounds, right? So, you know, there's fuel there for a broader reversal. It's something to be aware of, okay? You know, just as long as we get the right entries and tight stops and everything else, everything seems to take care of itself, but something to know. But here is the interesting part of this slope and why I am, kind of positive on cable right here and think it could be actually a very important support. So this slope, same angle, right? If you extend it off the March low from 2016, okay, now let's go down to a daily. That was support to the T, precise as can be. It was also resistance back in August. 8, 1, 2, and 3. I think 8, 3. Wasn't this BOE day right here? I think it was. Traded around to some congestion here. This was also BOE. This was the rate hike. And now here we are trading right on the same exact line. Same exact spot, right? And again, we have simply a progression of decent slope here, right? So we got lots of stuff here to work with. This is the kind of confluence that can give you a powerful boost, a quick boost on the upside. So that's what I am looking at with cable, and it's not just that 4-hour chart that I've been showing in the swing updates that makes me bullish British pound here. It is more importantly this long-term parallel, okay? I mean, these are big moves off of this parallel, right? February 2016 low, I actually remember that extremely well. Buying into this, and it was, you're trading 138, to 145, okay, in a matter of weeks. That'd be nice to get here. I don't know if that's going to happen, but okay, Aussie. Aussie's a bit confusing for me at the moment. Really the only commodity currency that I think there's a decent setup right now is dollar CAD. But Aussie, if we were to ever get down to the 25 line on this channel from the 2016 low, I think it's probably a buy. 200-day average is down there. As mentioned the other day, one of the updates, I would pay attention to like 77.90. Okay, so square root level, 77.90 support early this month, 10.3. So I would pay attention to that. You've got the slope confluence there as well, which is the median line downward sloping, but this parallel as well. Okay, which does cross through some pretty good levels. Resistance back on 418 or 417. Resistance back on June 30th. And it's a little bit lower. You do have a 618 here as well. So here's the 618. 77.95. Okay. So don't have too much to add for the Aussie at this point. We're actually trading right now. We are trading right on the monthly opening price, which is 78.30. So kind of, well, clearly, not a whole lot going on here. We're unchanged for the month in the Australian dollar. Haven't moved a whole lot, but you can see how this could be a bullish launching pad, right? We're coming in, you come into 77.90, maybe build yourself a little right shoulder, something like that. You do have an upward sloping neckline, which would be a positive. Momentum wise, what are we looking at here? On the daily, we have come into and rebounded from RSI being above 30, which again, that is a positive. Okay, within the uptrend, you don't really want to go below. It's on a daily chart, which is going to be much broader, of course, than a 4-hour chart, but you get the idea. The momentum profile at this point can still be considered bullish to sideways. Okay, I say bullish to sideways because you had divergence up here, right? You had RSI failing before 70. So this could just be a broader sideways pattern rather than say simply a dip in a bull. Kiwi, not much for me to look at there. I'd love to get 70.06. Okay, that's 2 legs down from the high that we had back in July. Okay, I don't know if we're going to get that, but if we do, it also happens to be the trend line from 2015, 2016 that was support, of course, back in May. So would be a great spot to get to if we had it. I wouldn't really pay a whole lot of attention to Kiwi until you either get there or we get back through the monthly opening price. So, to me, this is somewhat of a near-term bearish setup because we have failed at the monthly opening price, right? 71.95 is monthly open. We traded there the last 3 days, and then we've come off today, right? So to me, a lot of confusion with Aussie and Kiwi, just not really seeing it, not really feeling an opportunity. That's okay. No need to force it if it ain't there. There's plenty of other things to trade and look at, okay? Dollar CAD, this is one that I actually do like in the commodity world. Simple trend line, boom, boom, boom. Had put out the short last night via Twitter, but then changed it when I put out the update, later that or after that. So last night. So we had the update and suggested a short into 25.29. We traded up today. What was the high? It was like 25.30 or something like that. 25.30 something. 25.32, 33. Okay, so yeah, 33. All right, so we've got this trend line here. Going to a short-term chart, you can go to a 4-hour, 60-minute, whatever, and you've actually got a pretty good-looking slope to deal with. Going back to the the trend line from the lows. Okay, so just draw this in right like so. Okay, and you can put on a fork, a channel fork. Okay, all right. And do you see what's happened here? You can trade between these things all day long in this kind of environment, but we topped on not just the longer term trend line yesterday, but the 75 line of this fork. Okay, so you'd be looking towards at least the 25 line, which is going to get you about 24.50. All right, right now, dollar CAD's also trading on its month open 24.82. Trading on its month open 24.82. You do have the median line down here near 24.60. At this point, break even on the stop. I'm just going to kind of let it go and see what it wants to do, if anything at all. But would love to try to get a test of this trend line down here. Okay, and that would actually be in line. If we could get there, say, the market's right now pretty slow in FX. Volatility and everywhere is pretty damn low. But if we could get, say, a move down towards, say, early next week near 124, that would be nice because you got a lot going on there. Lows back here in July, congestion, resistance back here in September, right? A little bit of something here in late September, early October, and that would be down on this trend line, right? So just kind of trying to trade trend line to trend line here. Not trying to complicate things too much. I'm not sure as to the broader trend right now, with with dollar CAD, right? Like if we're still broadly lower, then this would seem about as good a place as any for us to turn over and go, right? However, this rally here, I mean, you can count this as an impulse, so we could be in a broader correction. Even if we are, right, you would think that you get a deeper pullback. Okay, and the first area is going to be down on this trend line, which depending on when you get there, it's really going to be anywhere from, you get there tomorrow, you're talking like 2370, 2380. You get there next week, it's more like 124, which is a level to pay attention to anyway. Okay. Now, I will say that if we trade through this trend line, okay, probably going to get a quick shot up to 2650. 2650 is a high volume level. Also is resistance back on 831. Okay, right here. And it's also the lows from June of 2016. Okay, so 2350, 2650, 2660, something like that would be where we, probably gravitate to if dollar CAD were to break through the trend line. Okay. At this point, I don't really care too much. Just, short, break even, let it go. And if it does, we can maybe get, 24 or something out of it. Okay, dollar yen. Dollar yen. I am not sure what, if any, what's being attributed, if you will, news-wise, to the pickup in yields and the drop in. Amir's asking EuroCAD. Yeah, we'll take a peek. But overnight, right? This has happened a couple times recently, where like the U.S. session, really pretty dead for the most part. And I'm not just referring to FX, but in the bond market. So, yields, obviously dollar yen, and everyone looks at yields with dollar yen, especially because, because of the correlations, of course. But when we're looking at the bonds, U.S. bonds, look how many gaps we've got. Huge gaps since September. Huge gaps in TLT, right? Huge. So, if I pull up the futures contract on this, you see all these big days, all these big drops. That's all not during the U.S. session. Everything's happening overnight, and it's obviously in the Treasury market. So, it's not happening during its own market during the U.S. session, which is a little bit annoying, I guess. But that's what we're seeing is we get these moves, and dollar yen is the big responder, okay, in FX world. So what's going on with dollar yen? Where are we headed? So dollar yen and dollar Swiss are the two pairs that are interesting, I guess, most interesting as far as potential longs, against dollar. Look, dollar yen seasonals, okay, October, November, really, really bullish. Okay, that's all there is to it. And you got this turn higher. I think we had the right idea and that we were looking for 1160 at one point, 1180. And then I was thinking or hoping we'd get down towards maybe closer to 111, right? Because that would get us an opportunity maybe to buy the really long-term parallels. And, that's simply this, right? This is a weekly chart here, okay? We're looking at the long-term parallels, and you can see very clearly how important these parallels are. This was the election last year, so we're getting close to that 1-year anniversary, actually. And after we broke through there, it was just off to the races, right? So support, support, support. And it would have been perfect if we could have come into this and tested this area closer to 111 before taking off on the upside. I just don't know. We've got, at this point, it's Wednesday, but at this point we already have a bullish outside week in dollar yen, as you can see. This is actually a real bullish engulfing pattern. You hear a lot of people say bullish engulfing patterns, whereas it's really not true. In order to have an actual bullish engulfing pattern, you have to engulf the whole candle open to close. So that means that you have to have a gap. You have to open lower than the prior close and close higher than the prior close. And that can really only happen in FX with a weekly chart or, a monthly chart if the new month starts on a Monday, because there really are no gaps on day to day, right? Not real gaps, because it's a 24-hour market. So this is an actual bullish engulfing candle at this point. Now, I don't know what it's going to look like on Friday. It could look very different, but let's just go with this for a second. Let's say that we, that you end the week like this or whatever, or dollar yen is a bull. Let's just say it's up. We've gone sideways for 3 to 4 weeks, and now it's time to go higher during the bullish seasonal period. Okay, let's just work on that. So where would we, maybe look at that, or where would we want to buy it, right? Well, we do have a pretty good slope to work with here. Okay, we have a good slope to work with here, and where I'd probably be looking to do it would be at some point on this blue line, okay? We've got great touches for resistance. This was real clean. When you get action like this, you know that you're working with the right angle, okay? Or at least you have confidence that you're working with the correct angle. All right, so we should get an opportunity to buy on an angle, or on this angle, right? We just don't know, of course, where exactly it's going to be. If we go off of this level, this was not support, was it? I don't think it was. Let's see. 42, yeah, 42. And not really, right? Could be something to watch, though. I'll keep that for now. You do have the 20-day average right around there as well. It's going to be about 112, 50, 112.40 or so. All right, what's the high here? Yesterday, 112.47. So that's yesterday's high. That's going to be in line with 20-day average. So that's level to know. But again, so too is this parallel down here, right? So are there any clues or hints from, say, momentum that we can gather? Do we have any RSI stuff here? Let's take a look. Well, you close like this, you're actually going to get daily divergence. Okay, divergence. It's because we're below 65, and we're actually at a new closing high right now. The closing high is 1283. So if you close above 112.83, you're going to get divergence. Doesn't mean that you can't explode through it. We had divergence after the election. That didn't matter too much. All right. Four-hour. Let's go to the 4-hour. Definition of a sideways move, right? No overbought, no oversold on the 4-hour since 9/21. Okay. So yeah, I do lean towards the idea of buying a dip at this point in dollar yen. Um, you know, would have loved to see us. We were looking before. I would have loved if the market traded up into the median line, found resistance because it was support before, it turned over, went to 111, and then we could buy it and have a wonderful, time being long from 111 or something. But that's not going to happen. It looks like at this point. So what I would be doing, folks, over the next day or so, the rest of the week, I'll be looking at support starting at about 112.50. Okay. And finally, the next upside spot that you're looking at, by the way, a 4-hour chart here, but it's scrolled out. So the next spot you're looking for on the upside is probably going to be up towards 114, 115. Okay. You have the high from July at 114.49, and that would be in line with some slope over here in next week. If things really get bullish and we go back towards the upper parallel, then no telling where this wants to take you. But I'd kind of let the profit or any upside take care of itself at this point. Just know that you've got 112, 112.50 really is kind of a starting point, I think, for support. Okay, so that brings us to across. If we're thinking, or at least I'm thinking, that the dollar is generally in a fourth wave, but that you could get upside in dollar yen, yen crosses might be primed, right? So this is one that we talked about in the swing update. Yeah, it might have been last Thursday. But dollar yen has broken its short-term downtrend, okay? And it's trying to separate itself from that now. Okay, so this is one to pay attention to for a long pound yen on the upside, right? Again, for me, being already long pound dollar and maybe looking to buy dollar yen a little lower, that to me, that would put me long pound yen on a synthetic basis anyway. But your weekly opening price in pound yen is 48.53. Okay, so that would be an area to just kind of mark down or note as potential support. Okay, for pound yen, 48.53. Let's see what the momentum stuff looks like on pound yen. $20 days up here, oversold, resistance at 40, downtrend, but now resistance or support at, 60 on resistance, now 40. So you're going into more of a sideways pattern here rather than a downtrend sell rally pattern. For pound yen. The daily chart momentum is still extraordinarily bullish. Okay, you've got the overbought up here after the rate hike, what have you. Good pullback, more or less testing, the triangle breakout, right? This was the chart from last week. Testing it, turning up, working yourself on an inside day here. So yeah, I like the idea of, just long pound yen, how you time it. for me, it's long pound dollar and then buy in a dollar yen dip. Pound dollar, maybe you get a general dollar drop, pound rallies as dollar yen pulls back. But over time, dollar yen's going to outperform any pound dollar weakness, or maybe they both go up. All right. So that's a cross that I'm very interested in with pound yen. Dollar Swiss, this chart, again, this is one that could be, if there is something on a big dollar upside move, maybe it's dollar Swiss. We're testing resistance here now, right? This is the 200-day average, okay? And you've got a trend line from back in December, actually, of 2016. So you got the trend line there. You got the 200-day average. There's a lot to get through here. If it gets through it, might be off to the races for a while. From my own kind of looking at the dollar and what's going on, I'd kind of be favoring, I guess, more of a pause, more of a pullback within this bullish slope. But there is a bullish slope to work with. In fact, you've been trading between the median line and the 25 line since September 14th, right? Boom, 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 boom. So big resistance here, but pay attention, because if we start to get above it, you could get a breakout. All right, median line acceleration could take you a good deal higher in dollar Swiss. Again, might be something that you want to pair with, say, like pound Swiss, right? I like pound on the long side, so pound Swiss is an interesting chart to look at. Okay, here's pound Swiss, right? Building an uptrend, it seems. Again, not something that I'm going to trade. I'm not much of a Swiss person unless I'm trading options or something for it. But generally speaking, up, sideways, might be ready to be up again, right? Let's go to there's a Euro CAD question, but then I want to run through some stock market indices, because, well, sentiment's getting a little stupid. Stupid can always get stupider, by the way, but we should be on guard for some important price levels for reversals in the stock market. Okay, let's look at EuroCAD. Amir wanted to look at EuroCAD. It looks like Amir's left, so I hope Amir comes back, because I'm going to look at EuroCAD right now. EuroCAD. We've actually 618. This is a chart that I'm sure most of you remember. This is a chart that slope line, 75 line support, 25 line resistance for basically 4 days, and then we've started to separate from yesterday after dropping. So EuroCAD near term, probably headed for a test of, I'd say, first the median line and this parallel, which is going to be down near 146.10. Currently trading 147 about, but that's where I'd be looking near term for EuroCAD. Okay, down towards that 146, 146.10 area, and then the 200-day average. But what you have, I think with the Canadian dollar, as I mentioned, acting pretty well, right? The trend line. This could simply be a broader downtrend structure, right? But you want to trade within the slope lines. There's no big setup here that says we're about to fall off a cliff or anything. You just have, a simple channel. Trade the channel lines. This is resistance in the channel. It's the 75 line. Support down here. First support is the median line. Okay, so that's EuroCAD. Let's go to let's zoom in on the chart a little bit and see if we can find anything as far as resistance is concerned. Well, it's just kind of trading around the month open here, 47.14. I don't see anything special here. I mean, it's pretty choppy and pretty ugly. There's no like clean impulse on the downside. If you were to get a spike though, what you'd want to be looking at for resistance would be 147.77 or so. That's going to be the close from the high day, right? 47.77. That close right there. That's the close from 10.11. So that would be resistance if you get a pop. Okay. All right, let's look at some of these equity indices. We'll look at the S&P, we'll look at the Dow, look at the NASDAQ, we'll look at the DAX, look at the Nikkei. All right, this is the NASDAQ. Actually looking at the QQQ, which is the ETF. We're looking at the fork that goes all the way back to 2002. So this is originally drawn on a weekly chart. Here's the parallel, the gray parallel you can see, resistance throughout 14, 15. We've traded above that level, okay? The next level, this parallel, June high, July high, it's about 149.80 tomorrow, okay? So that's where to pay attention to in QQQ, which is the NASDAQ, essentially, NASDAQ 100 ETF. Okay, let's go then to the S&P 500. Okay, the S&P 500, this is a shift fork from the 2009 low. This seems to be the place to trade on as far as the levels are concerned. We're actually trading right on kind of around resistance from a parallel that was, actually late October, early November 2015, and then February of 2017, okay? The more important level is this first red line. You can see the red line here going May 2013 as a first touch and resistance, and after that, it was actually support at times on the upside. Now that level's not going to be for a while, okay? So if we do get like a blowout type leg or move or what have you, then that's going to be all the way up near 2620 or something, which is 60 S&P points away. And can we get something like that? Yeah, sure. I mean, I saw a crazy stat yesterday. So the S&P, look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days ago, 2 weeks ago, right? S&P is trading 25, 52, 53. With the sentiment and the types of articles that are out there that we're reading, stock market this, stock market that, you would think that the S&P would be screaming higher. We're like 8 points above where we were from 10 days ago. So I don't have much conviction in the equity market right here, whether I'm saying we're going to pull back or whether I'm saying we're going to blow out. I don't know. I do know that if we do blow out and we trade 26.20 or something like that up on this red parallel, then I'm probably going to be buying puts. Okay, and I would expect that the first support you go to is going to be this magenta line, which is down near 24.60. Okay, so that from here you're talking 60 points to the next resistance and about 100 points to the next support. Okay, so I hope that helps as far as the S&P is concerned. I guess there's a chance that we do roll over here because this is a level that's done something before. But again, my confidence is not extremely high on the S&P right now. It's very difficult to have confidence in a market that really is really quiet, right? It's just so quiet. There's an old adage, right? Never sell a quiet market. At the same time, it's like, there's another hedge. It's too high to buy, right? Too high to buy, too quiet to short is kind of how I feel. So yeah, I'm an observer on the S&P right here. But those are the levels to know and to pay attention to. All right, what about the Dow? Let's go long term on Dow. So this is an end of day index, this Dow. So we don't have today's price action. So we first started looking at this on the long-term chart, or the long-term page, excuse me, actually back in December, so not quite a year ago, right? The very long term with all the caps, blah, 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 blah. So we talked about basically the importance of the median line from that, which is this. Okay, and we've got all these parallels associated with it. So you can see the median line here. Okay, the first time we broke above that median line was actually in 1996. So now I'm going to zoom in. So the first time we broke above it was right here in 1996. We went up to this line, so keep that next line in mind. The pullback didn't quite reach the median line, but you get the idea. The median line's a pretty good divider of bullishness, bearishness, what have you. Support for it in 2001. That was September 2001, of course, 9/11. Support throughout 4, 5, and 6, and 2008. But once we cracked it, it was kind of game over, right? And then recently, pretty much resistance back in 13, 14, traded around it in 15. Okay, so remember I said that next line, the next higher up is 24, it's above 24,000. 24,180-ish is the next spot for the Dow. It's in 1,000 points. Okay, it's far away. I get it. But I would be aware of it because, look, you know what, when you go into a blowout, if we get an actual blowout, you could, that's the kind of thing where you do see a crash afterwards. Okay. So I would be cognizant, if not, getting confident about it as you get up to here. This essentially is crash territory, put buying heaven up here. Until then, let it work itself out. Okay. If we do make a top here and we do tank, this is actually support now. All right. That's going to be down at 20,800 or so. So you're talking again, like the S&P, we had what, 60 on the upside, 100 points on the downside as far as the levels were concerned. Well, as far as the Dow's concerned, you're talking, a little over 1,000 points on the upside. But the downside, you're talking over 2,000 points on the downside. Okay. So that's where I would focus my attention for these indices. Okay, and the Dow one might be the most important one to look at. I know everyone kind of hates it, but they make fun of it, price weighted, blah 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 blah. But I don't think there's much denying the importance of this median line, right? I mean, you can see that thing clear as day. It's pretty damn important. So I think that we go test it. I don't know when that happens, but when it does get tested, I'd actually watch it for support. If we trade up here first, probably want to just go outright bearish on, the Dow market in general. Okay, what about the Nikkei and the German 30, also known as the DAX? So the DAX, good chart we've had. This is the weekly chart. It's a good one. Again, really long term, 2003. Heads up on the magenta line. It's up here. Really damn precise. It's like 13,330, 340. Okay. So from today's high, you're talking about, another 300 points on the upside. But that's where I would pay attention to for a top or resistance. Again, wave count wise, we're looking at 1, 2, 1, 2, 3, 4, 5. So this is probably 1, 2, larger 3, broader 3, pullback 4 at some point, and then 5. Okay. See dollar CAD starting to come off a little bit. All right. I dig it. All right, what did I say? I was going to look at, the Nikkei. So the Nikkei, which I do have actually drawn over here somewhere. This is the Nikkei ET, no, it's not the ETF, it's the CFD, excuse me. And what we're looking at here is slope off of 2009, 2011. And that, I think, is probably your best bet for an operation in the Nikkei. I'd be looking actually at resistance at some point. Again, it's a lot like these other ones we looked at as far as, especially the US indices. Like there's nothing right here, right? There's nothing, I don't have anything right here, at least. Resistance could be a little higher. If we go again for a kind of a blowout move, you might be looking at 22,300 or something like that. Ultimately, though, this blue line, this blue slope line is simply a parallel. This is log scale, but it's a parallel from the 2009, 2011 trend line. You want to follow this. This would be probably where you want to be a buyer, right? Pull back on support. And again, that's going to be about 20,500. So you're looking at, almost 1,000 points on the downside. Okay. For Nikkei support. Again, knowing the levels, knowing where they are, is kind of the first step. So know where these levels are so that when you trade to them, you're prepared to act and you're not sitting there guessing and like hoping that what you're trading in the right spot or whatever, right? I always think that the best thing to do is know where the levels are, trade on the levels, and then you should know really right away if you're wrong or not, right? So there's no sitting there second guessing or whatever. At least that, I think that's the best way to go about it. So same thing as the Dow on this thing. Could get a little higher. If it does, you're looking at basically testing the 1996 high. But the pullback, this is a big breakout, and you're probably looking at 20,500 as support. Okay. All right. So those are levels that we are looking at in the equity markets and ending this webinar with. Okay. So I'm going to wrap it up here. I will get it up and archived, and have a great rest of the week. I do want to let you guys know I'm going to be traveling tomorrow. I'm going to be driving down 7 hours from here. I'll be driving to Alabama. One of my sisters is getting married, and it's my youngest sister. She's getting married. So I will be driving down to Alabama, and I will not be anywhere near a computer during those 7 hours. I will, of course, have an update tonight. I will do my best. I will bring my laptop and everything and go through markets and try to have an update for you tomorrow night. But I really am not going to be around during the day. So just a heads up, okay? Obviously, all positions and anything will be sent out via Twitter if need be. But yeah, all right. So I'll leave it there. Okay, thank you all so much for your time. As always appreciate it. And have a great rest of your week. Okay, bye-bye. Jamie Saettele here signing off.